UiPath stock has been on a tear as of late. After reaching close to $12 per share, the stock price has jumped over $16 per share, which has a lot of investors asking what's going on with UiPath stock. So in this video, I was going to provide a brief overview of what's going on with UiPath stock and why the stock price is soaring. So let's get into the details. So management said that they ended the quarter with ARR of 1.249 billion, which was an increase of 28%. Remember, ARR is annual recurring revenue. That growth rate of 28% is impressive considering the macroeconomic headwinds that many enterprises are facing and the slowdown in spending from tech companies. Revenue of 297 million was up 21% year over year. Non-GAAP operating margin increased from -4% in the first quarter of last year to positive 17% in the first quarter this year. That's a significant jump in year-over-year operating profit margin, considering that revenue only increased by 21%. It shows the company's done a good job controlling costs and boosting revenue at the same time, demonstrating economies of scale, something that the stock market investors really appreciate, and including myself. I appreciate companies that deliver excellent economies of scale like UiPath delivered in its most recent quarter. Non-GAAP adjusted free cash flow in the first quarter of 73 million was the first time the company delivered non-GAAP adjusted free cash flow at the outset of the year. So another excellent metric that got UiPath stock investors excited. Customers with 1 million or more annual recurring revenue increased by 43% to 240. 43%, so more than twice the rate of revenue growth UiPath achieved with its highest spending customers. That shows me that UiPath is delivering excellent return on investment to its most valuable clients. Otherwise, they wouldn't be increasing their spending with UiPath, and that's really good news for Path stock investors going forward. Management said that customers chose UiPath because of their market-leading technology and breadth of platform capabilities, which allow for stack consolidation, vendor rationalization, and accelerating return on investment. What this is saying is UiPath offers many services that enterprises want and need, and the fact that enterprises can buy it all from UiPath is helping them because enterprises are looking to consolidate. They want to reduce the number of providers that they deal with, right? Because if you think about it, a business has to deal with so many different providers, and the more providers you have to deal with, the more of a hassle it is, the more it reduces productivity. So if you can get more services from a single provider, that consolidates your provider list and increases productivity. And so UiPath is benefiting from that trend of enterprises looking to consolidate spend. And I'm noticing that from many of the companies that I follow. You're dealing with cybersecurity providers, data providers, customer service providers, cloud services, and so on and so on and so on. So as a business, you want to reduce all of those providers. If you can have a one-stop shop, that would be beneficial, and UiPath is certainly seeing that from its clients. So there you have it. For all these reasons that I mentioned here, excellent revenue growth, excellent economies and scale boosting its profit margin, increasing business with its highest value customers, all those reasons boosted UiPath in its most recent quarter, which has its stock price soaring. And so I hope that sheds some light into what's going on with UiPath stock. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.